Current trading data confirms that GE Vernova, ticker symbol GEV, is trading at precisely 706.93 USD, marking a staggering intraday surge of 81.63 points or 13.05% to the upside. If you are watching the charts right now, you are witnessing a breakout that defies the typical behavior of a utility-adjacent industrial stock. The general expectation for companies in the energy infrastructure space is steady, plodding growth, safe, reliable, but rarely explosive. Investors typically park capital here for dividends and defense, not for the kind of double-digit vertical moves we usually associate with volatile tech names like Nvidia stock or a breakout in Tesla stock. The market expected GE Vernova to simply maintain its course as a reliable provider of turbines and grid solutions. The reality, however, is that GE Vernova has effectively revealed itself to be the silent engine behind the artificial intelligence boom, forcing a massive repricing of its future cash flows. The sharp disconnect between the boring utility narrative and the critical AI infrastructure reality is what is driving this aggressive buying pressure today. While the broader market was focused on which chipmaker would dominate the data center rack, smart money began realizing that those chips are useless without electrons. This surge to over $700 per share is being fueled by a pivotal investor update event, where management shattered previous guidance ceilings. They didn't just nudge the numbers up, they radically altered the financial trajectory of the company through 2028. We are seeing a reaction to a raised multi-year outlook that now targets roughly $52 billion in revenue by 2028, significantly higher than the prior $45 billion forecast. Even more critical for the bulls is the profitability metric. They raised the adjusted EBITDA margin target to 20%, up from the previous 14%. When you combine higher revenue with much fatter margins, the implied free cash flow generation explodes. To put a cherry on top for the shareholders, they doubled the dividend and increased the share buyback authorization to $10 billion. This is a capital return profile that looks less like a capital-heavy industrial firm and more like a cash-rich, mature tech giant. The trading volume today is confirming high conviction, with institutional blocks actively accumulating shares at these elevated levels. This isn't just retail traders chasing a ticker on the Robinhood app, this is fund-level reallocation. When you look at the energy transition, there is often a misconception that it is purely about solar panels and wind farms. The reality that GEV understands and is monetizing is that the grid needs stability, especially as power-hungry data centers come online to support AI models. Intermittent renewables cannot provide the 24/7 baseload power these facilities need. This is where GE Vernova's gas power segment is proving to be the absolute golden goose. They are seeing a massive backlog of orders for their heavy-duty gas turbines because, frankly, they are the most immediate solution to the energy deficit. If you are sitting at home managing your portfolio through Schwab Intelligent Portfolios or looking for investment help, you might have missed this nuance because the headlines are always about green energy. But the brown energy of natural gas is being rebranded as the necessary bridge, and GEV is the toll booth on that bridge. It is worth looking at how this stacks up against other market favorites. When you analyze Apple stock, you are looking at consumer cyclicality and ecosystem lock-in. When you look at GE Vernova, you are looking at the physics of the grid. You cannot run an iPhone or an H100 GPU without the electricity generated by these massive turbines. The company operates in three main segments: power, wind, and electrification. The power segment, which includes natural gas, hydro, and nuclear, is the current profit driver. It provides the cash flow that allows them to fix the wind segment, which has historically been the trouble child. The wind segment has faced issues with offshore turbine reliability and supply chain costs, similar to what competitors like Siemens Energy and Vestas have faced, but the narrative is shifting there too. Management is streamlining the wind business, focusing on workhorse turbines rather than experimental science projects, and the losses are narrowing. This turnaround story in wind, paired with the dominance in gas, creates a dual-engine growth model that is rare in this sector. For those of you who engage in self-investing or use investing sites to track sector rotation, you have likely noticed a shift of capital away from purely speculative software plays into hard tech or physical infrastructure. This is where GEV shines. The company was spun off from the legendary General Electric conglomerate, a move that many skeptics thought would leave it exposed without the backing of the aviation or healthcare divisions. Instead, the separation has allowed GEV to be more agile. They are no longer bogged down by corporate bureaucracy. They are a pure-play energy transition giant. The Electrification segment is perhaps the most underrated part of the business. This division focuses on grid software and transmission technology. As we add more solar and wind to the grid, the complexity of managing those electron flows increases exponentially. GEV's Grid OS software is designed to orchestrate this chaos. It is essentially the operating system for the modern power grid. This high-margin software revenue is what pushes the company's valuation multiple higher, moving it from a standard industrial multiple towards something richer. For those of you who engage in self-investing or use investing sites to track sector rotation, you have likely noticed a shift of capital away from purely speculative software plays into hard tech or physical infrastructure. This is where GEV shines. The company was spun off from the legendary General Electric conglomerate, a move that many skeptics thought would leave it exposed without the backing of the aviation or healthcare divisions. Instead, the separation has allowed GEV to be more agile. They are no longer bogged down by corporate bureaucracy. They are a pure-play energy transition giant. The Electrification segment is perhaps the most underrated part of the business. This division focuses on grid software and transmission technology. As we add more solar and wind to the grid, the complexity of managing those electron flows increases exponentially. GEV's Grid OS software is designed to orchestrate this chaos. It is essentially the operating system for the modern power grid. This high-margin software revenue is what pushes the company's valuation multiple higher, moving it from a standard industrial multiple towards something richer. For those of you managing your own money through an individual brokerage account, it is vital to look at the free cash flow yield. With the new guidance, GEV is projecting at least $22 billion in cumulative free cash flow through 2028. That is a massive war chest. They can use that cash to acquire smaller tech firms, pay down debt, or continue buying back shares. Share buybacks are particularly powerful when the company believes its stock is undervalued, which, despite the rally, management clearly does. They are putting their money where their mouth is. If you are using Robinhood Cash Management or keeping cash on the sidelines, days like today are a reminder of the opportunity cost of not being invested. The market waits for no one. While you were waiting for a dip, GEV ripped 13% higher. This is why time in the market usually beats timing the market, a philosophy championed by Fidelity Investments and other major asset managers. The move in GEV is a textbook example of a fundamental repricing event, where the efficient market has to scramble to catch up to new information. To wrap up the analysis on GE Vernova at $706.93 USD, the expectation was a standard industrial spin-off with legacy baggage. The reality is a lean, cash-generating machine that is critical to the future of AI and energy security. The market has woken up to the fact that you can't have a digital future without a robust physical power grid, and GEV is the primary architect of that grid. The massive beat on guidance, the double dividend, and the aggressive buyback program are all signals that management is confident in their multi-year growth runway. The pivot from a fix-it story to a growth story is complete.